to another episode of Real Talk about real estate and real stuff.
With realtors.
With realtors. A couple realtors here, sitting here, just shooting the breeze. Hey, here's what I want to know. Everybody, is the market going to crash? Are we headed for a huge crash? Are we in a bubble? Bum, bum, bum.
Scary thoughts.
Did that go? That was probably so loud on the mic.
She's gonna.
Courtney's ears are like, oh my God.
We like the show tune. Thanks for that.
Okay. So is the market going to crash, Kels?
I mean, if you ask the news, they say yes.
Oh yeah.
You know, it's all over I talked to a buyer in an open house this weekend, and he said, well, I think, the news is saying that prices are going to go down. And I said, well, what have you heard? Like, what have you heard about that? And he didn't have like super factual points to make. I wouldn't really expect him to, it's just a lot of hearsay, and you can't always regurgitate everything you hear on the news.
Well, in the headline, I mean, Lester Holt's NBC News headline is like,
right.
And then they tell the real story as you get a little
it's clickbait. I mean, there's so many, how many articles do you read where it's like, oh, that looks interesting headline. And then the article's nothing what the headline said,
Yes.
And then there are some articles that are opinion pieces where people maybe don't know what they're talking about and do say that the market's going to crash. And here's the reason why. And I think that the people who are saying the market's going to crash are looking at like a global economic standpoint rather than a little bit more localized, or like what's going on nationwide with supply and demand, and just more localized information.
Yeah. I mean, I don't know. I don't think anybody really does know. I mean, the market the real estate market we're talking about could crash. But when I think of crash, I think of, what happened in like 2008, 9, 10, 11, 12. So I don't think that's going to happen. Right. I think we're just going to have a normal market. And a normal market is nothing like what we've had over the last
3
Well,
years.
even since like 2000, well, maybe it was more normal in 13, 14, 15. 16. But even then at the time, I'm like, oh my God, this market's so crazy. It's going to go down any minute now. And it just kept going and going and going.
I know.
When I bought that house on Kestrel Court for $275 or $280, I'm like, oh my God, I'm probably buying at the top of the market.
Doubles in price.
Yeah, doubled in price. Yep. Anyways,
it's crazy.
So you just don't know, but crash.
But is the market going to crash? Is there a bubble that's going to burst? I mean, probably not. It doesn't. I can't think of a reason why it would, because we have this huge supply and demand issue builders have not been building enough homes for the last 10 years. So there's all this pent up buyer demand. Millennials are a huge generation, and boomers are the main home buyers right now, but millennials are following in a close second. Between the two generations, there's just so much buyer demand and not enough supply.
Boomers are selling and buying.
They're
downsizing.
Yeah. So, and there you go. If they're downsizing, they're buying the same homes that millennials are buying their first home,
right?
Creating even more demand for that middle market. So I think when you think of economics, like everything in economics depends on supply and demand. And when you look at the real estate market in terms of supply and demand, we just don't have enough inventory for the amount of demand we have. And I think that that's all there is to it at the moment. But we'll see how employment goes.
Bob Evans wrote a really good article in the Chico, this is local, Chico ER. And it was just about housing. And basically he said, oh, darn, I don't know the exact numbers, but in 10, 20 years, our population is going to increase. Like the population's only increasing. This could go globally too, or nationwide, I should say. We're only going to build more people. So we need to build more houses, right? We can't keep up. We're not, you probably just said that and I'm just saying it in a different way, but, I think you're right. The supply and demand is going to be a strong component of that. But the interesting thing is the interest rate situation.
Mm-hmm. I know. I think what ends up happening in the second half of the year is going to be unknown until we know what the interest rates are going to be doing. Because if we stay steady at 6.5 or go down, I think we'll continue having a lot of demand in Chico and nationwide, really. I mean, there's other areas of the nation that have seen only price increases. Like a lot of areas in Florida have seen only price increases. And then like Boise, Idaho has seen price decreases, but they saw they were one of the highest markets during COVID market.
Right.
So it's all very localized. But if interest rates go up to 7 or higher, we are going to see a huge drop off in demand. I think a lot of buyers will get out of the market because they can't afford it anymore at that price.
I guess too, the other thing, I agree with all of that. The other thing that we can't predict is anything like, is the market going to crash? Well, we don't think so because of supply and demand, but weird things happen like COVID. And when COVID happened, I thought, oh, the market's going to crash. Yeah. And it was the opposite.
It's the opposite. We all thought market was going to go down at that point.
I mean,
and it just blew it up.
Oh my gosh. Yeah. We better all start, saving. Well, we should do this anyway, but saving those quarters, dimes, and pennies because we're going to need them. Nobody's ever going to buy a house again. And the opposite happens. So I just feel like there's no way that you can predict anything except that we all need to have a roof over our heads. And if you have the opportunity to buy, then you should buy.
And if you think about what happened during COVID, why did the market boom? Because the interest rates went down to 3%.
Yeah.
So the housing market,
to
try to stimulate the economy, and people didn't lose their jobs. Like people kind of thought that would happen.
Right.
They just went, I mean, the world pivoted and we went virtual for a lot of things and people could work from home. They didn't lose their jobs. And then the feds lowered the rate to stimulate the economy. The mortgage rates followed. I mean, a lot of it does have to do with the interest rates because at the end of the day, it's what people can afford to pay monthly.
Right.
It's all about budget.
That's true.
That's what it boils down to. It's as simple as that. I solved the problem.
Well, okay. So if they would not have lowered the rate so low, then maybe we wouldn't, we wouldn't have had to raise the rates so high. Yeah. Like now they're trying to correct.
Yes. 100%.
And I'm not blaming. Nobody knows. It's kind of like when you're the spectator at a sports event and you're going, you dummy, why didn't you get it in the basket or whatever?
Right. It's like, well, you're not the one playing.
Yeah, exactly. Yeah. Okay, NBA star. Yeah. But anyway, and I'm not pretending to even know anything about what the feds do or know
just
what
the
to
inner
do.
workings.
But if you really look back on it and go, okay, well, you reduced the rate and now we're paying for it.
And they reduced the rate and they printed money. So that's why we're seeing they didn't just print money. They printed money.
That thing was working overtime.
Yes. So if you're listening to this podcast, you're probably interested in economics and you probably already know that, but it's one of the reasons why we're in this little kerfluffle that we're in now.
Kerfluffle. Is that a word? Kerfluffle.
That's an economic term.
Oh, okay. Really?
No. I was going to mention too, going back to the generations thing and how that guy, Bob Evans, wrote the article about we're just making more and more people. I read an article that millennials are having less children. And in the next 10 years, there's a possibility that prices will go down because there's less demand.
Oh, interesting.
Because we're not having as many babies. So the next generation is Gen Z is smaller than the millennials are. And then the generation after that could potentially be even smaller. So I don't foresee that happening in the next 10 years, like this article said, but it could be a longer term trend that we end up seeing.
That makes sense. I feel like millennials are not having children. Like everybody used to have 3 kids at least. Mm-hmm. Well, before that, everybody used to have 10 kids.
Yeah. And now, and then it was 2 to 3. I know a lot of people have 4 kids.
But we also have people moving here from other countries.
Right.
So that's part of it as well. Mm-hmm. Right? I don't know. That's
for now.
We'll
see if that continues. So, okay, say prices, we're not going to crash, but prices could go down. So if prices do go down in the next year, if interest rates go to 8%, our market shifts, we go down 10% for pricing. I bought my home for $500. It's now worth $450. What do I do? Well, can I still afford the payment?
Right.
Yes. I'm locked into a 30-year mortgage. I did not get a variable interest rate, so I have that interest rate for that 30 years, and I still have my job, and I can still afford the mortgage. So I'm just going to chill the F out and stay in. I censored myself and stay in that home. I mean, I think that people think real estate is a short-term investment. There's a lot of like, I think with my generation, people think they're going to buy and sell and buy and sell and buy and sell and just move up and up and up. And that's not how this game works.
It's not like checking the stock market every day, right?
No.
It's not like, oh, this is what it says my stock is worth today. Yep. What is it worth next week? Or I don't know. I don't check mine very regularly, but I have been lately. So it is kind of interesting. But that's, you don't do that with houses. You don't check the value of your home every single, some people do, but
it's not as black and white as stock is. It's like, okay, this is the price that the stock is today. Your home value isn't going to go up or down daily. I mean, it might go up or down monthly, but then there's always that time where like, hey, I listed my home in a down market, got a unicorn buyer and got $30,000 over asking or whatever, you know? So there's always, the market is what a buyer is willing to pay for the home. And I think that my generation needs to understand how real estate is a long-term investment.
It is a long-term investment, but let me ask you something. What if you did lose your job? What if somebody lost their job and didn't get a new job? Mm-hmm. I mean, that could be a real situation. I think it depends on what your industry is. Yep. You know, if you are in the medical field, you're probably never losing your job.
Or a teacher.
Yeah. I mean, those are all things that will still stay relevant, but mortgage lenders, realtors.
Yeah. Commission is tough sometimes.
And tradespeople, people that are
because if the housing market goes down or if we go into a recession, then the trades tend to suffer a little bit.
People don't go to Home Depot as much if people aren't buying houses. So, you know, that could happen. So I don't think we're going to get that far, but who knew that we'd have a pandemic?
I know. I think that could happen for some people. I just don't think it's going to be enough to cause a crash or the majority of people. Because in 2008, there were so many people who couldn't afford their mortgages. And now we've learned from that, and people who are getting mortgages now at this time can afford their payment. So if something drastic like job loss happens, well, that happens in any market. That happens at any time someone could lose their job. And if they now cannot afford their $3,000 a month payment, then they're going to have to sell potentially at a loss and go into a rental that's cheaper. I mean, I think that happens anyways.
Logan from Housing Wire. From Housing Wire. You know, he was pointing out how people say, oh no, this tech company laid off, 11,000 people. And I'm going to totally screw up the number, but there are millions of people, that millions or hundreds of thousands.
That what? I don't know what you're
are employed.
That are employed?
Yeah.
Oh, yeah.
So when you say 11,000 people lost a job at whatever, Google.
Mm-hmm. But there's 500,000 employees.
It's a small percentage, but it's a good headline.
It is a good headline.
It's a great headline.
You better click that and actually read the article.
Yeah,
Let this be a lesson to you and us. Okay, well, I think anything else you got to say about?
No, I just think at the end of the day, I think we're going to have a normal market for a while. Yeah. And to some people, they're going to feel like that's not necessarily a crash, but maybe not as ideal. You know, people like in our industry, really. I mean, I think that we're going to see a shift in certain areas of employment, but I don't think we're going to have anything catastrophic.
Agreed.
Okay.
Thanks for listening to our rant.
Peace out.